I thought we'd take a look at a biotech that comes up often here on the call. It reported yesterday, I think that's Mesoblast, out with its full-year results. Losses widening from around 80 million to 100 million in the last financial year. Also failing to provide any dividend or any guidance at all. Running a ruler over the stock. Jeffrey's downgrading it to a hold from a buy after those weak results. The broker sitting on the sidelines waiting for the outcome of the company's meeting with the FDA in regards to use of its flagship COVID treatment. Price target getting a trim down from $1.90 to or to $1.90 from $2.55. Andrew, what do you think of Mesoblast and the result, and what's been the feedback?
It's not one that we cover in any great depth, and the reason being is that it's not really given us cause to. This is one of those companies that you put in the category of really hoping that it succeeds because it does potentially such great stuff. But it's been on the market for a while, and over its history, all it's really done is bleed cash. I mean, the share count has doubled over the last 10 years. The REM stem cell, I think I'm pronouncing that right, product, it's one of these broad application, very promising therapies. So you can see why the market likes it. There's something there, but quantifying that, trying to work out the timing of that is incredibly, incredibly difficult. So it's one of these businesses that, for me, it feels a bit like a gunner business. It's always about to do this, you know. It's just not there yet. And again, I'm saying this from a perspective of someone who hasn't done the deep dive into it, but it just, as I say, at the level that sort of matters for investors in terms of what's happening in terms of the cash flows, there's just nothing there at this stage. It might come, and hopefully it will come, because that means they've got a really great product on their hands that's helping save and improve the lives of a lot of people, but it's just not there yet. So yeah, for me, it's just too speculative.
Yeah. Michael?
Yeah, look, much the same. It's a well-followed stock. Seems like it's been around for years and years, with much the same story, always about to play out. Just looking at my notes from previous ausbiz appearances, around this time last year, the company was coming into its decision time on that REM stem cell study that it was conducting, and at that time it was almost peak Mesoblast. I think the share price might have been up around the $5 mark, but soon after they must have got some bad news. The share price took a bit of a hit, or quite a big hit, and that's, I think, the story with Mesoblast. It's very much a binary outcome type of stock. Should they get FDA approval, should their clinical trials go to plan, the sky's the limit for this type of company. But on the downside, if it doesn't come off, you can lose money pretty quickly. The most recent setback is I think they're going to have to undertake their clinical trials again for the REM stem cell product, because in order to get emergency or to get approval to become an emergency therapy, that is potentially what they're going to have to do. And that's obviously got a lot of costs involved. There's obviously the risk that they don't get approval once again, and that could send the share price back further. And to Andrew's point, it is a serial fundraiser, and the thing is, it looks like it's going to have to raise funds again, because if it's going to conduct these clinical trials or the second round clinical trials for this REM stem cell, then it's going to have to raise more money, and that's going to cause further dilution. So unless they can come up with some sort of agreement with some other drug company to fund it, it's looking like they'll have to come back with their cap in their hand to shareholders for another raising. So no go for me.
Yeah, it's always seems to have a story, does it? And runs up and then peters out and another story comes. So yeah, it's an interesting one.